Hey, I got something to say. I'm just so sick of hearing everyone complain.
Welcome to Crypto EMC, and today we're going to be looking at how to trade on the futures platform in OKX. I have to say I'm quite impressed with OKX. The more I play with it, the more I see that what they've done is they've looked at what is available on the market regarding third-party trade tools and they've gone and implemented all those into their platform. Tools like on-chain data, the trading bot. And today we're going to just be looking at how to trade, how to get that first trade in on the contracts platform. So we're going to be trading perpetual swaps. So if you hit the contract margin trading tab, your screen will load same as mine. Now, there's a few important things to note. On the left-hand side where you select your trading pairs. On the right-hand side is your order book. You also have a top movers tab there. And then in the middle, you've got your chart, the big market buy, market sell. And if you've watched the spot trade video, you should be familiar with limit and market orders. For those that are not, limit is where you buy at a predefined price, and market executed order gets you in at whatever is available at the moment to the required amount that you need. If you scroll down a little bit further, you'll find almost like a menu section where you will be able to track all your open positions, current positions, and edit and change, take profits and stop limits of any positions that you might have open. So first up is the symbols menu. If you want to trade, you need to have access to your coin trade pairs quite effortlessly. And what they've done is they do have the favorites section where you can select the coins that you are trading, or maybe you want to trade, or maybe you're tracking for a trade and make them your favorite, which means that on a later stage, you can flip over to the favorites menu for easy access. If you're trading spot and you are trading on perpetual, you can even use this function to be able to flip between the spot and the perpetual trade menu. Meaning if I click on the spot trade pair, it's automatically changing everything and it turns into a buy BTC or sell BTC menu without any leverage options. So you can easily jump between them. Also, make sure if you are new to trading that you don't unnecessarily have these two favorite if you're not too comfortable trading on perpetuals just yet. In addition to this, they also have additional filtering systems that you can use, like the layer 2 function, storage of DeFi coins, so that you can have access to a specific category of coins. You can see that if you want to be trading some meme coins, there's all the memes. If you want to be trading GameFi, there's all the game, blockchains, and so forth. Something that is interesting for me as well is that you can marginate your USDT, USDC, or crypto, and you can filter around that as well. Heading over to the order book. The order book is where we kind of gauge how the current market activity, where we want to get in, and at what price. Now, you can filter your order book as well through different sizes. If you want to be looking at big areas between the 100 ranges, you can see all the various people trying to enter or sell the market around 19,400 and everybody willing to buy around 19,300 and 19,200. You can see there's still a lot of orders. It's in the millions. If you filter this again, you can see how all the different various orders are moving through. One thing that you also can do is you can only look at all the buys, or you can look at all the sells if you want to take profit on a specific order, if you've got a big order like that. Also, what it does is it does give you a list of all the trades, the trade history of what is happening. Is there's a lot of buys happening in a row? Is there a lot of sells happening in a row? So you can keep track on that. Moving a little bit lower, you have the top movers menu. It's a scanner or a filtering system that I can use to see where is momentum. Remember, when we trade, we want to be trading something that's got a lot of momentum behind it. We don't want to be stuck in a leveraged position that's not moving. That's the worst place to be because you get charged all sorts of fees. Want to know those fees? You can head over to the buy sell area and there's a fee structure. And these fees come up in different tier levels depending on how much money you funded your account. Okay, so now when we look at the bottom menu, this is where you have all your trades or the current trades or your management of the trades or open positions that you want to take. You can change them. You can filter by different options. It's pretty self-explanatory in that essence, but it's necessary for me. I love to go here and edit, take profits and stop limits as price moves through different levels. Now let's head over to the chart section itself. As you can see, there's the market buy, the market sell, where you can long or short. Remember, we are on the perpetual area, so short means taking a position. It's not getting out of a position. And when I right click in the chart, wherever I want to be, I can actually set an order. So if I want to be trading to this specific level over here, I can hover my cursor over it, right click, and action a sell order, a limit sell order for that specific price. If I go below where price is trading at the moment, I can actually do the same as well. I can zoom out and I can hover my cursor at a specific support level that I'm interested in and right click and I can action a limit buy from that area. This would probably be the easiest, quickest way to actually get the stuff set into your buy area. But before we do that, let's talk about this. When we look at this buy sell, there's an isolated area and then there's an area where we set our leverage. I think by default, your leverage should be set at 3x. Now, what is the difference between isolated and cross? Well, cross means that any other spot you might be holding in your wallet can be utilized as collateral should your trade go into the negative. So let's explain a scenario. I'm taking a long at around 19,247 and price keeps on falling and I forgot to put a stop limit in. As it falls, I'm obviously owing them more and more money. And what they would do, if this is set to cross, they will head over to my spot wallets and see whatever coins I have in there and use that as collateral to hold that trade in the negative until the collateral gets close to the amount of money that I'm in drawdown. And then they will liquidate my entire portfolio, my entire account. Having it isolated, I can choose that I only want to use my USDT, meaning I want to keep my Bitcoin, my Ethereum, everything else safe. And if the same scenario plays out that the market is falling, I will only be losing my USDT collateral. In this instance, if I were to take a long position and it goes against me and I do not cover it with a stop and it keeps on falling, I will get liquidated and only lose $1,000 worth of USDT. The available USDT because I'm on isolated. Heading over to the leverage amount, it is recommended to start off with a 2x or 3x. I use the 10x function. Reason being, it's easier to do the calculations in my head when I know that it's 10x. Now, what is the 10x? If I've got $1,000, I can borrow 10 times that amount of money to trade with. But the crux is, if I take a drawdown of 1%, in theory, because I'm 10xing my account, I'm going to be held responsible for 10 times that amount. So if I have a 1% drawdown in my trade, meaning I'm buying at 19.3 and it goes down $193, I will actually lose 10% on this. So it's important that we do have proper risk management. Stay tuned till the end. We're going to take you through our Discord where you can find some good risk management guides, tools, and tips. Okay, so I want to take my first trade and I want to trade. There's a few ways that we can do it. We can actually input by manually typing it in. Or if I've got a trade that is quite close to the entry and there's orders there, I can actually click on that order and it copies the value in for me automatically. If I want to be shorting, I can click on a value there and you can see that it automatically starts taking that value over. This is just simple, easy tips for us to get in and out or build or make a position quickly if we're going to be trading quite aggressively on lower time frames. Also, what I can do is I can use the slider bar to decide how much money I want to be putting in. If I want to be taking 25% of my entire portfolio, the $1,000 that I've got available here, or I want to trade with the entire $1,000, which means I'm going to be taking a $10,000 position because of the 10x leverage that I've got. Now, one thing I would say for anybody, and I do not trade without having this ticked on. I always have the take profit stop limits tick on, whether I'm going long or short. The reason being is if I'm trying to get a trade setup set, so I'm trying to buy, say at 19,200 and let's see, 19,207. I'm trying to buy 19,297, and my stop limit is going to be 19,242. So I'm going to be inputting 19,242. Because I've got this in there, what it's going to do is it's going to show me how much I'm going to lose if I get stopped out. It's going to give me my entire risk. So before I get that calculated, I at least have to say how much of my money I'm going to use. So if I say I'm going to take 25%, so I'm going to be buying in with $2,500, give or take a few. If I'm going to carry a loss or a stop limit up to 19,242, I'm going to be losing $6. Now, the goal is never to lose more than 3 or 5% of your collateral per trade if it goes against you. So if this is $1,000, give or take a few, I can lose up to $30. So I can bring this bar up to a point where I can see, well, I can go up to $30. If I find a situation where I have a tight enough stop like this, and I can risk even more, only then I can go and say, right, let's up the leverage. But you can see it's already prompting warning signs. This is high leverage and very risky, which means if I do exactly the same, if I go on a 20x and I trade with half the money, it's the same as going on 100% and trading on 10x. You will have the same amount of money that you will lose if you get stopped out. Now, say I've got an even tighter stop. My stop is sitting at 200 and say 80. Let's make it 280 for the argument. I can leverage even higher, and you can see that I will only be losing 13%. That is for when we can. That is why there is these higher leveraged options. But remember that that's trading on very smaller time frames, and you have to be advanced and comfortable with your trade setup. Because if you get caught up in a position like that, moving the market or market moving quickly means that you might be losing more than what is pointed out there. Because if you look at the order book, you want to make sure that if you get stopped out, there's somebody on the other end at that price actually willing to take the trade for you. Otherwise, the market is going to keep on looking for somebody to buy, and you might be losing a little bit more than what is intended or what it's shown there. Same thing for take profit. So I'm taking this trade and I'm betting on the fact that it's going to go to 25K. I'll be making $5,000 on this trade for risking $17. Seems like a good trade, but remember, you need to have a setup to make sure that, or a strategy to make sure that you're not just putting your stop limit in harm's way, because it can get pricey if you get stopped out 5 or 6 or even 10 times in a row, trading these high leverage levels. When we look at trading on spot, and I'm trading a spot, if I'm in Bitcoin, I buy. And if I'm out of Bitcoin, I sell. Therefore, I'm back into stable. It's a simple in and out transaction. So when I trade Perpetual Bitcoin, if I'm going to go long, to try and get out of my long, I can't go short. I will in essence be hedging my position. Meaning, if we look at this chart, going long at the bottom and going short at the top will be two separate trades. Meaning, if the long breaks past my stop limit, continues on, the stop will get closed, or the short will get closed by the stop limit, and the long position will be carried on, and vice versa. If I were to go long at the bottom and short at the top, if the market fails and makes a lower low, and my stop is quite tight, my long will get stopped out and I will carry my short on. That is the idea. But if I'm only trading in one direction, I will have to make use of the reduce only function to get out of my long. So if I want to get my long taken, I'm in a long position and it keeps on going and I want to take some profit, Opening a short will not work because I will actually be taking a different trade. I will not be taking profit. I will have to hit the reduce only button in order for the exchange to know that I'm considering closing some of my long position. So it's important that you understand that this additional step is needed when we trade on perpetuals. Another way to do that is obviously just to scroll down to the menu at the bottom and partially close or close your position completely. Looking at the chart section, now that we know how to buy, we know how where everything is, kind of feel kind of familiar now. There's an additional few functions that we can look at the chart as well. I can flip over to the trading view version of this. And this then allows me to actually use my indicators, put on a fib level, draw a trend line as such. If you head over to the layout button, top right hand side of the screen, you'll find that you can actually flip between standard and pro. Now, pro changes the layout. As you can see, it incorporates the buy and the sell into one menu, as it should be functioning as one menu. You'll take note that the reduce only button is still there, and the take profit stop limit button is still there. So I normally trade using this layout because it's just easier for me, and it brings out the important information, meaning I want to be able to manage my trade orders as they are getting placed. Something else to take note of, if I head over to the little gear button, I can actually flip between dark or light mode. I trade through the night, so the dark mode is the more comfortable layout for me. And I can even set when I want my candle close to be. Now, a lot of us trade using candle closes, so this is a nifty tool to actually set that. Okay, now, this being said, we've now looked at everything. We now know how to place an order. We know how to manage the risk. Let's go through risk management just to make sure that we've got all our bases covered. Now, all you need to do is click on the link in the description to open your OKX account. And if you do that, there will be a secondary link that takes you to a Google Sheet form. And select the OKX partner account. And all you need to do is just fund the account with the minimum amount required. Send us your user ID, just your user ID and your TradingView username. And for a limited time, we'll actually be giving you a support resistance indicator access as well. And you will have access to the premium trade group in our Discord server. The Discord server looks something like this. And under the risk management tool, there is a few steps or a few things that you can consider to help you get the risk management down pat. So first things first, we need to define a few terms. When we talk about risk, this gets determined by the invalidation price of a strategy used. Meaning if you've got a specific level in the chart that defines where you're going to draw the line. Maybe you've got an Elliott wave count, 1 or 2 can't, 4 can't go below 1 or something like that. That will be defined by your strategy. So that being said, that is where your risk is. Your risk is up to that invalidation level. Secondly, we'll talk about expectations. This is defined by the success probability of the strategy, meaning if 9 out of 10 times the strategy works in your favor, you now know what you expect. But if the strategy has got a 7 out of 10 probability or a 5 out of 10 probability, you now know that there's going to be more times where you're going to get stopped out. So your risk management has to be done even stricter. Okay, so that being said, head over to the expectation management tab. You can click on this hot link and there's a whole setup of how to explain how to manage or how to gather the expectation management data from your trade strategy. Secondly, let's define our variables. When we look at a position, this is where you go long or where you go short. And when we talk about the position budget, this is the amount of money you want to spend. So if I head back to my exchange, this is the position budget, the amount of money where I'm going to go. And this is where I'm going to go long or short. So the position is either long or short, and the position budget gets defined by the amount of money I'm going to be spending. So when we have this information at hand now, that we can go and look at our risk goal. Now, the risk goal is the max intended risk your trade portfolio should have. not to be confused by position. So your risk goal should always be between 3 to 5%, heading back to the exchange. If you look at the available money that I have in my account, this is my collateral. The risk goal gets applied to the collateral, meaning if I'm taking a loss, I don't want to lose more than 3 or 5% of that specific position or my available money. Now, with that being said, leverage is when you measure, is the risk measured below your risk goal? You can leverage your position or borrow more money. So what does that mean? Well, if I now take where I'm going to enter and I'm going to flip over to the trading view section, I'm just going to use the measure tool. My invalidation level is going to be at 19,000 for argument's sake. If that is the amount of risk, 0.33, this means if I want to lose 3% and I've got 0.3% of risk, I can 10x to get to 3%. So if I were to take this trade up to that level, I can use 10x. So if we do the calculation, we know that our risk goal is 3% and we know that our risk currently on the trade is 1%. So if I had to take 3 divided by 1, it's going to give me a risk factor of 3, which means I can take my position budget, times it by 3, and take the trade. And if I stopped out, I will only lose 3%. There's a few examples and there's a few chart setups. Go through them, familiarize yourself, and make sure that you have good risk management. And this is the key to any successful leverage trading. Right, guys, that's everything from my end. We're going to be dropping more of these little educational videos for you guys. Scan the QR code, pause the screen, scan the QR code, and head over to the Discord to get access to the risk management tab. And as always,
Keep hustling.